is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at the Bloomberg New Economy Forum in Singapore, and here's what's coming up on today's program. Well, these are your top stories. Easing tensions. Presidents Biden and Xi cover a range of issues during a 3-hour meeting in Bali, acting to deter a U.S.-China clash. Global stocks climb. Picking up the pieces, Binance founder CZ announces a crypto recovery fund following massive outflows sparked by the collapse of rival FTX. Plus, I'm here at the Bloomberg New Economy Forum in Singapore, where China's vice president says Beijing is committed to a peaceful path.
Countries need to cast aside Cold War mentality, reject bloc confrontation, and build balanced, effective, and sustainable regional and global security architectures so as to achieve lasting peace and universal security.
IEA coming out also with an oil market report saying oil markets are facing a strain of stockpiles at an 18-year low. Now, the dynamic, of course, is as China reopens, if they need more oil, it make it a lot more difficult for Europe, but given that so far we haven't really seen a difficult winter because the weather has been quite clement. Now, President Biden has hailed a meeting with his Chinese counterpart, saying both countries will resume cooperation on issues including climate change and food security, but that differences remain over Taiwan and trade. It follows a 3-hour meeting on the sidelines of the G20 summit in Indonesia. Now, for more, we're joined from Bali by Bloomberg's Anne-Marie Hordern. Anne-Marie, thank you so much for joining us. I know there's a lot going on in Bali. Yesterday, a really historic meeting between the presidents of China and the U.S. What's expected today?
Well, today, a lot of the talk, Francine, is that what these leaders can actually agree upon when it comes to the communique. And it looks like at this moment, according to a draft statement, that most leaders can condemn the war in Ukraine, but will not name Russia. And that's how a majority of these Western countries are able to get others on board to sign their names in this communique, because whether or not it's G20 or it's a split one, they're able to get more people involved. But I would say that Russia's invasion of Ukraine is really taking center stage today. If yesterday the focus was, of course, more on President Biden's meeting with Xi Jinping. We heard from Sergei Lavrov. Most notably, other leaders did not leave when he gave his remarks. And also notably, Sergei Lavrov, according to our reporting, stayed in his seat. This is the Russian foreign minister when President Volodymyr Zelensky addressed the G20. So Russia's invasion of Ukraine is dominating not just in the optics, but also in the conversations in terms of what does this mean for energy and food security. And we heard from Indonesia's president. Of course, Indonesia is the host country for this G20, and they said fertilizer is key going into 2023, making sure they can shore up enough fertilizer so there's enough food for the world, and they can really focus on food security on this summit going into next year.
So, Anne-Marie, we also know that the Crown Prince of Saudi Arabia, Mohammed bin Salman, is showing up. How much of that discussion will be on energy security, but also bringing some of the oil and gas to Europe?
Well, of course, I think you'll see a lot of leaders want to flock to Mohammed bin Salman on the sidelines. It was really touch and go on whether or not he would be here. But of course, he flew here last night, this according to the Saudi press agency, and here's on the ground. Francine, what we've really seen is a recalibration of a lot of relationships towards the kingdom and other huge petrol states or natural gas states like Saudi Arabia, like the UAE. Mohammed bin Zayed is also here for meetings on the sidelines. And you think of also the discussions that have been at other multilateral forums when it comes to Qatar. And this has to do everything, Francine, with what is coming up in December. December 5th is going to be when those sanctions on Russian oil is a crackdown due to the European sanctions. And this is what you see on the sidelines a lot of countries working on. It's making sure they can get that price cap done. I spoke to Ursula von der Leyen, the president of the European Commission, and she said they are ready to go. So expect more news from Europe about how they plan to implement this price cap. But one crucial note is missing from this price cap when I spoke to Ursula von der Leyen, Francine. She would not give me a price, which is going to be really critical for countries like India, which are still importing Russian oil and at a steep discount.
Anne-Marie, thanks so much. Our Anne-Marie Hordern there in Bali for the G20, and she'll, of course, be joined by a very big guest also a little bit later on. Now we're joined by Sarah Hewen, Chief Economist for the Americas and Europe at Standard Chartered. Sarah, thank you for joining us. A lot of questions about global energy security, inflation, and, of course, the role in China in the economy going forward. Are you a little bit more optimistic that with China's reopening, supply chains will become easier to manage?
Absolutely. We've had some very good news, some good developments in terms of China reopening, and we expect that over the course of the coming months that will help to support supply chains. Of course, China has been relatively successful in maintaining supply chains and exports despite the COVID restrictions. We also have to be cautious about not expecting too much too soon. We think that going into the winter, and especially given the rise in COVID cases that we're seeing across the country at the moment, it's going to be premature to expect a full lifting of restrictions. But certainly by the second quarter of next year, we think that there will be much more of a normalization. In terms of what this means for China's fuel consumption, then that will be picking up. But elsewhere, we think that fuel energy demand is going to be very weak.
So, given what we heard also from Chinese data today, are you expecting policymakers to intervene to try and support the economy more? And what's the right way to do this?
Of course, we have seen some support coming through, quite a lot of support coming through already. The measures announced earlier on supporting credit to the property sector, I think, is a move in the right direction. There's ongoing fiscal support, and we think that that's going to gain more traction as COVID restrictions are gradually lifted. It's not that the support hasn't been there, it's just that the environment hasn't been conducive to really activating that support. On the monetary policy side, there's perhaps a little bit more that can be done, but we think that most of the emphasis is going to be on credit-related support and on spending, infrastructure-related spending. The data were very weak as expected, but I think going forward, we're sort of more positive on the outlook for next year.
So what's your take on inflation overall? Have we touched peak? Have we touched peak in the US? And what does that mean for the dollar?
We do think that we've touched peak in the US. The data that we had most recently for October were very encouraging, even if there were special factors that helped bring that monthly inflation rate lower than even we'd expected. For the dollar, we're seeing a turn in the dollar. We've brought forward our dollar weakness forecast. We already had a weak trend for the dollar in our forecast, but we see that that turn having happened already. And it's not just because there are signs of inflation peaking. We're seeing some signs of a softer US labour market, but also the prospect of reopening in China, and Europe also looking on more solid footing in terms of energy, with supply having been built much more than expected and demand moderating. So all of the factors that previously were dollar supportive in a sort of risk-off sense are turning around and becoming less dollar supportive, much more supportive to the G10 currencies and others.
Sarah, for Europe, do you think things are actually going to be better than expected, or did they just catch a lucky break because the winter months, and we're just at the start of winter, just hasn't been as cold as expected?
Absolutely. The good autumn weather has certainly helped, both in terms of mild weather and in terms of the rainfall that we've had and wind. All of that helps the renewables generation. What we're expecting, though, is that the economy is likely to slide into recession later around this current quarter and into the early months of next year, but that the recession can be held relatively limited. There is still quite a high cost for energy, and even though Europe has done a really good job in terms of rebuilding supplies, we're in a much stronger position than we thought possible back in March, just after the invasion. So for Europe, it's going to be a difficult few months, but not as bad as it could have been, and brighter prospects for next year.
Sarah, thank you so much. Sarah Hewen, their Chief Economist for Americas and Europe at Standard Chartered, joining us this morning. Now, coming up, we'll have more from the Bloomberg Economy Forum here in Singapore. We'll be talking to the Algebris Chief Executive and Founder, Davide Serra. That interview up next, and this is Bloomberg. Economics, finance, politics. Good morning, everyone. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua at the Bloomberg New Economy Forum in Singapore. I say good morning, but it's also good afternoon in this part of the world. Now, it is day 2 of the 5th annual Bloomberg New Economy Forum. More than 750 top business leaders gathering to discuss how capital can address some of the world's problems. Now, U.S.-China talks and the global outlook, of course, have dominated discussions here, where China's vice president said his country will keep opening up and working for peace. Now, we're joined by Davide Serra. He's Chief Executive Officer and Founder of Algebris. Davide, as always, thanks so much for joining us. Now, what you have to do is put capital to work. Where do you find opportunities right now?
Well, you see, there are plenty of opportunities. I think where we see right now one of the most interesting space is actually in all the basic renewable, plastic, water, aluminium. So in this green transition, everyone has been focusing on the energy side, but you actually have the proper materials, just the basic. And in order
to plastic to recycle, or for the circular
plastic,
economy?
Exactly, circular economy. So basically anything in the circular economy, but with real large companies. Because let's remember, here it's not so much about finding the new technology, it's in moving what we currently have to a more reusable level. And so we're looking at more and more. This company, we launched a fund recently focused on it on a global scale. And what we have found after analyzing company over the last 2-3 years is that most of these companies are 50 years old. So these are traditional companies that are winning in the circular economy.
In what part of the world? Because I was just on a panel on the circular economy, and they say, look, if you look at Europe or certain parts of the US, single plastic usage is banned. In other parts of the world, it's not. So is that where you have to double down on efforts?
Yes, well, that's two issues. For investing, Europe and US is the best part because their regulation is going to force basically company and consumer to adapt. So if you want to make money on circular economy, you're better off investing in Europe and US. Yeah. In Asia, where there is none of this, right now that's the polluting side, and they don't care. And so there, it's more about finding...
some countries care, right? Because of social unrest.
Of course. But let's say on average, when I look at the whole heat map in terms of pollution. And that's where, in reality, you can find company, particularly in the metal space, because so much, 80% of what is needed, in particular in the EV world, is made in China. And as a result, if you want to find the leading cutting-edge technology for EV space, is actually in China today, not elsewhere.
What do you do with China right now? So we're listening together to the vice president of China. Of course, a lot of it is foreign policy. A lot of it, and there's a sigh of relief here where you have global leaders saying, look, Xi and Biden seem to be getting along and certainly seem to take the tension for the moment out of the markets. Does that matter as an investor?
It does matter because let's be clear. This year, lots of investors have been taken by surprise by the Ukrainian war. We always had a very bearish view on Russia. We said it was uninvestable for 10, 12 years. We never invested there, and we took a clear stance after doing lots of work. So actually, it was not a political issue; it was a structural issue. I think the fact that Xi Jinping de facto said, "Listen, Putin lied to me." Secondly, I want to protect the territorial integrity of Ukraine. It's massive. So what it means is all this media, let's say, hype that China and the US don't get along and it's war in Taiwan. In reality, I think it says, hey, cool things down. Let's go back to basic. And I think that's very important. I also think China is very investable. And so this idea that...
Through what? Because, one day we hear that there's support for the economy. The other, it's also regulatory crackdown.
Well, regulatory crackdown on some of these industries, but basically, remember, if you take what Alipay and WeChat can do in China, no other company can do it outside. So it's not that they had a regulatory...
Musk may be trying to do that.
Well, but it's not a regulatory crackdown. Basically, it says, okay, listen, there's check and balances also in China on what you can do with data. And So I think, in reality, investors be taken by surprise, probably because they were too bullish. For example, we find lots of companies in China on the ground that actually are executing and implementing this green transition, and are crucial to the world. So I think you need in a way to decide which are your key objectives.
Yeah, and I'm going to ask actually about banks and see the objectives there and talk about the U.S. shortly. Davide Serra, thank you so much, the Chief Executive and Founder of Algebris. He stays with me, and we'll talk. We'll have a robust conversation about the banking world. Now, we'll also have plenty more throughout the day right here from the Bloomberg New Economy Forum in Singapore. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at the Bloomberg New Economy Forum in Singapore. Now, let's get back to Davide Serra. He's Chief Executive and Founder of Algebris. I love giving Davide a hard time. Davide, is the UK under this new government finally investable?
It is. You remember last time I came on your show, I said that the UK had a twin deficit, 7% fiscal and 7% current account, that makes 14% twin deficit, compared to 4-5 for Europe and the US. So that's clearly unsustainable, the worst twin deficit of any G20 country. That made worse by Liz Truss' decision to actually give 50 billion of tax cuts. What is great is under Rishi Sunak leadership, they're actually doing the opposite, so 50% of cuts rather than help. I also work with Rishi briefly, and I have to admit the guy is competent, knows the numbers, warned the UK government that under Liz Truss' plan, this would have happened. He wrote various articles throughout the summer. So I think the UK is absolutely investable. Secondly, it's much cheaper, both at currency level and multiple level. And hence, yes, we'll go through a recession, but let's say it's clearly investable.
Okay, but what's the right way forward for the UK given Brexit? So there's more and more economic analysis that actually Brexit means that the UK economy is not working at the potential it could have been.
Yes. So Brexit, it's a clear lose-lose. We said it very clearly. And economically. And now the issue is they need to find this so-called Brexit dividend that is not clear. And is not clear to anyone. And I think the biggest risk is that voters and eventually people might think that they've been duped. Because if they only see less jobs and more taxes, well, that wasn't exactly what was promised. And I think that's, to be honest, is the biggest risk.
But David, the global context is also inflationary everywhere. You have tight labor markets in other parts of the world.
Yes, we think on this, let's be clear, 2020 we said inflation would have spiked and wrote various articles. We think inflation has peaked for 3 reasons. 1, commodity prices have already come down. You see nat gas in Europe is below where it was a year ago. Secondly, every company is full of inventories. You know, Apple, it's discounting its MacBook for corporates. They've never done that. So that means even Apple is long inventory. And third, central banks have been aggressive enough, in my view. And so I think we're getting to a peak level of rates.
So we talk about leverage, over-leveraging in the economy, you know, zombie companies. Is there a financial? I know you're an expert on financial or banks. What's your favorite bank right now?
So the best news is through the last 10 years of re-regulation, through the work of Mario Draghi and then Mark Carney, at basically the beauty is this time you see every blow-ups, it's outside the banking system. You know, the last 20 years, blow-ups, there was a bank. Right now, there's no banks. Secondly, we've seen it in the crypto space. We've seen it in all the over-leverage happened outside the banking system. Where I'm worried is the buy now, pay later, which I call buy now, pay never. Yeah. So I think lots of the venture capitalists there are going to lose all their money. Secondly, I'm worried about some of the private markets that became maybe overheated. In the banking system, I think banks have never been as safe and as secure. And in Europe in particular, they're trading on 4-5 times earnings. And they're paying more than 8 to 10% dividend yield. Yeah. So I think it's one of the best investments people can make.
Davide, thank you so much, as always, for coming on. Davide Serra, Chief Executive and Founder of Algebris. Now, with that, let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. A joint statement drafted for the Bali summit looks set to see a majority of G20 nations condemn Russia's war in Ukraine. The communique seen by Bloomberg refers to the war in Ukraine, but not Russia's war in Ukraine. A compromise to get as many nations on board as possible. The draft cites increased global inflation, disrupted supply chains, and food insecurity, among other risks. The Democrats have won the governor race in Arizona, the latest battleground state to reject a prominent election denier candidate. With about 98% of votes counted, Associated Press have called Katie Hobbs as the winner with a narrow margin of about 20,000 votes. Defeated Republican Carl Lake had embraced former President Donald Trump's baseless claims of widespread fraud in the 2020 election. Credit Suisse has agreed to sell a significant part of its securitized products business to Apollo Global Management, along with the expected disposal of other portfolio assets. The deal is expected to reduce the division's assets from $75 billion to $20 billion. This is Bloomberg.
Welcome back. Here are your top stories. Easing tensions. Presidents Biden and Xi cover a range of issues during a 3-hour meeting in Bali, acting to deter a U.S.-China clash. Global stocks climb. Picking up the pieces, Binance founder CZ announces a crypto recovery fund following a massive outflow sparked by the collapse of rival FTX. Plus, I'm here at the Bloomberg New Economy Forum in Singapore, where China's vice president says Beijing is committed to a peaceful path.
Countries need to cast aside Cold War mentality, reject bloc confrontation, and build balanced, effective, and sustainable regional and global security architectures so as to achieve lasting peace and universal security.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here at the Bloomberg New Economy Forum in Singapore. Now, President Biden has held a meeting with his Chinese counterpart, saying both countries will resume cooperation on issues including climate change and food security. But the differences remain over Taiwan and trade. It follows a 3-hour meeting on the sidelines of the G20 summit in Indonesia. Let's get straight over to our Anne-Marie Hortern, who's been following this very closely. Anne-Marie, frankly, we were set up yesterday to not expect too much from the meeting. It actually seems that we achieved quite a lot, including maybe more peace going forward.
Certainly, Francine, and when the bar was set so low, they were able to exceed those expectations. What we really could read out of these readouts from the Chinese side and the American side, and also the comments the president made to us at the press yesterday, is the fact that there are these warming of ties. Most notably, there's going to be discussions between the Biden administration and the Chinese government with their counterparts on a number of issues like debt sustainability, health care, and food security. And then, of course, the president's top diplomat, Secretary of State Antony Blinken, will be making a trip to China to follow on this path. A key question, Francine, of course, you mentioned Taiwan. That is China's red line. They have made that clear. On a number of occasions during the Biden administration, the president has said he would send troops to defend Taiwan if there was an unprecedented attack. Last night, the president's language on Taiwan was that he does not see any imminent threat of an attack. But, Francine, the language and the rhetoric could potentially heat up in the coming months. Congress right now is discussing this Taiwan Policy Act. It would deem that Taiwan is a major non-NATO ally, and that would certainly irk Beijing.
Yeah, we understand, Anne-Marie, that there was a meeting between President Biden and President Erdogan of Turkey. This was not announced, but it's been reported by Turkish media. Was this about NATO?
Yeah, the U.S. press, Francine, found out because the Turkish press found out about it from President Erdogan's people. Listen, I imagine a number of issues were on top of the agenda for this meeting. We do know that there's obviously been the U.S. objection to the Turkey buying these S-400 missiles. They announced another round in August. The U.S., Turkey, wants to buy these F-13 fighter jets from the United States. This is key for Erdogan. But we also need to remember, President Erdogan is really coming into these meetings with a little bit more power, given the fact that he has been this main conduit between the rest of the world and Russia, especially when it comes to the Black Sea grain deal. Remember just a few weeks ago, after the bombing on the bridge that linked Crimea to Russia, President Putin had said, and there was a number of incidents as well from missiles from the Black Sea, President Putin said he was going to get out of the Black Sea grain deal. And then just 24 to 48 hours later, President Erdogan was able to recoup that deal, and we did see ships leaving the Black Sea. And this food security and the fact that they're also talking about fertilizer going to 2023 is really key. And Erdogan's one of these individuals that holds the power to potentially keep this grain deal continuing. And for developing nations that are dealing with higher inflation and the threat of hunger, this is really important. So I imagine this was one of the main issues, because November 19th, that deal is up for renewal, and we do not know yet if Russia is going to sign up.
Anne-Marie, thank you so much. Our Washington correspondent traveling with the president over in Bali for the G20, Anne-Marie Horder. Now, speaking of deals, we also understand through the Bloomberg terminal that Russia is expected to agree on extending the deal that they had for seeing grain export deals. Remember, when the deal hadn't been signed, it really caused chaos on the grain market. There was a lot of concern that a lot of, especially the Middle Eastern world, would not be allowed or could not feed itself. And so there was talk about a famine in that part of the world. We understand now that Russia is also expected to look at extending that deal. Now, here at the Bloomberg New Economy Forum in Singapore, the Citadel founder, Ken Griffin, also one of the key guests, sharing his thoughts about the prospects for the global economy. Now, he told Eric Schatzker that he's skeptical that a recession can be avoided in North America next year. And now he says it's not time to change course on monetary policy.
We think that one of the biggest drivers of consumer prices, which is rent, has reached a near-term peak. And then energy prices are likely to roll over in 2023 as compared to their 12-month prior. So two of your really big drivers of inflation, energy, rent, we think we've seen a peak in. And then across goods, we think this is going to be a really good holiday season for consumers, because American companies have built up such a substantial inventory of goods that they're going to need to sell here heading into the holidays. So we think we're going to see pretty good pricing for consumers as goods become very attractively priced to move them out of warehouses. Now, why is that? Obviously, in the pandemic, you couldn't enjoy services. You couldn't take a vacation. You weren't getting a massage. You weren't going to dinner with friends. So you bought a lot of goods. I mean, I can't imagine how many flat-screen TVs were sold to Americans in the pandemic that are, frankly, not used nearly as much today as they were a year ago. So this shift from a goods-based economy to a service-based economy is going to create this depreciation in pricing of goods, which, of course, will help bring inflation down. So we think the inflationary path has peaked. We think by the end of 2023, our central view is inflation will be back to roughly a low to mid twos range, which is a dramatic change from where we are today.
Some Fed officials, and of course it's so important to talk about the Federal Reserve, it sets the risk-free rate for the rest of the world, and of course has created unbelievable complications with the strength of the dollar for emerging markets. Some Fed officials can say the time has already come to back off. I could cite Charles Evans. I could cite Lael Brainerd, who didn't say it's time now, but it will be time soon. Are we there yet?
It's sort of like saying you go to your doctor, you've got a bacterial infection, and he gives you 10 pills to take, and you stop taking them after pill number 7. And then you relapse a few days later. Like, it's not yet time for us to change course on our monetary policy. We want to see that we put the inflation genie back in the bottle. We've endured a ton of pain in getting to this point. The housing market is definitely under duress. Durable goods sales are under duress. High-ticket items are just out of reach of consumers today, but we haven't gotten the job done. And to take the foot off the brake right now and not finish the job, I think is the absolute worst mistake the Fed could possibly make.
Why? What happens if they, again, back off too early? If you take only 7 pills instead of 10, what are the consequences for the U.S. economy and for the global economy furthermore?
So the biggest concern is you on-anchor inflation expectations. So right now, the American public believes, and not as much as we'd like, but the American public believes the Fed's going to get the job done. If we take the foot off the brake, we don't finish the course of antibiotics, and inflation starts to flare back up, the Fed will have lost credibility. If the Fed loses credibility and inflation expectations on anchor, then the amount by which we'll need to raise rates and deter economic growth will be a much bigger bill to pay. And we shouldn't put ourselves in a position to pay that bill. We should get the job done now.
What I want to know from you, Ken, is what do you make of the spectacular collapse of Sam Bankman-Fried's FTX?
Well, okay, so big picture, the crypto market cap today is a fraction of what it was when we first started talking about it. So crypto's not front
It was
and center.
$3 trillion, and now it's well under $1 billion.
It's like 800 billion, of which a big part of that's stable coins, right? So you really move back into a world of Bitcoin and Ethereum as the two dominant cryptocurrencies, both of which actually happen to be CFTC regulated. Look, FTX is one of these absolute travesties in the history of financial markets. I mean,
people will lose billions of dollars collectively.
People are going to lose billions of dollars. And that undermines trust in all financial markets.
Citadel's founder, Ken Griffin, there on the fallout from the collapse of one of crypto's biggest exchanges last week. Well, and this week, I have to say, it's one of the most fascinating, incredible stories out there. Now, he spoke at the Bloomberg New Economy Forum in Singapore earlier today. Now, coming up, we have plenty more from the Bloomberg New Economy Forum here in Singapore, including InCapital founder Jennifer Zhu Scott. So that interview is next. We talk about Web3. We talk about regulation in China. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua at the Bloomberg New Economy Forum here in Singapore. Now, day 2 of the 5th annual Bloomberg New Economy Forum. More than 750 top business leaders are gathering to discuss how capital can address some of the world's problems. Now, we're joined by Jennifer Zhu Scott, founding partner of InCapital, digital-forward asset management firm focusing on Web3. Jennifer, great to speak to you. Thank you so much for coming on. There's been so much talk, actually, about Biden and Xi, the fact that maybe some of the geopolitical tensions have been taken out or down a notch. But at the end of the day, is this about technological supremacy, about two world superpowers?
Thank you so much, Francine. Great to be here. I think the meeting yesterday actually exceeded a lot of people's expectation. What President Xi and Biden have provided is a very positive framework to allow policymakers and business leaders to add in substantial changes, and that actually can reverse a little bit this super hostile trend in the past couple of years. Because end of the day, as you were pointing out, that between U.S. and China, the two largest economy, end of the day, two countries, one will be better than other in some way, one way or another. Zero-sum mentality would not work, and we actually have to have the two countries collaborate in some of the largest problems in the world, like climate change, and a lot of those large problems require technology. So if you completely balkanize the two countries, there will be bad news for everyone, and particularly for these two countries.
But you do see, and the U.S. is now going after chip makers. I mean, you live and breathe this space. What's the most exciting piece of technology that is coming out of China? We also hear a lot about regulation. And of course, if you're sitting in the US, you think, right, well, why is China regulating some of the fantastic, innovative companies known all over the world?
So you were mentioning Ken Griffin's session this morning. One point he made I thought was so true, which is it would be very unrealistic to think with millions of engineer students graduate from China, and with all the capital, with all the interest, with all the market, China would not be able to catch up. It may not be every aspect, it may not be tomorrow, but eventually it will catch up. So the exciting part that we are seeing right now is actually deep tech. So the Chinese government clearly defined areas, deep tech, such as genome, space tech, quantum computing, new material, etc., new energy. And those are the areas that's going to fundamentally transform the economy. So what happened with the large tech companies you mentioned, in many ways, when I speak to some of the funders or our portfolio companies, they argue those large tech companies they funded like 20 years ago, they no longer consider as a tech company anymore.
Yeah. So Jennifer, is it actually, do you make a difference between tech that's good for the advancement of humankind and the ones that's recreational on social media?
So
is it like good and bad tech?
I actually think there's a difference between the kind of tech that binding hundreds of millions of people, each one with a smartphone, and do some daily activities, versus you really create some new technology and solve difficult problems. So I think that kind of old tech being considered, especially a lot of them have either monopoly or duopoly situation in China. So they lost favor. And the companies that really have IP intense type of deep tech companies, they are the new target to be supported by the government.
So this is breaking news to all the Lacqua children. Being on TikTok is no good for anyone. What kind of space do you want to be invested in? So what's coming up next in terms of sort of web applications, but I guess AI?
Yes. So AI, machine learning, I think it would be irresponsible for any of the tech investor not to look into this space because it becomes such foundational technology. Another space we are very actively gathering insights to prepare to invest in this space is climate tech. The world's second and third largest economy in the world, Japan and China, and also India in Asia, have already pledged in the next few decades to become net zero. I think we would not see a bigger infrastructure upgrade in our lifetime. So this is an area that will simultaneously create a lot of opportunities, but also great impact for the world. So we're looking into this space.
So this is what kind of things are you looking at? And again, is AI actually just to see, to analyze quicker about what works and not? Some of the stuff that DeepMind does.
Yes. So for example, we're looking at drone-generated data or sensor and satellite-generated data to provide insights about the quality of forestation, create carbon credit, also reduce waste in construction industry, reduce waste and leakage in gas, pipeline and mining industry, etc. So those are the area that it's actually quite low-hanging fruit because the application of those kind of deep tech in those, very traditional industry still at the earlier-ish stage. So the growth space is very attractive.
And how do you fund it? Is it quite easy to actually raise capital to be put in that space?
Yes.
Local? Is it
global.
Chinese money or is it global money coming in?
So global, yeah. At the moment, we actually don't focus on China onshore, because of all these uncertainties. Yeah. But we want to be open-minded, and when we're ready, go back. Yeah.
Jennifer, thank you so much for a great conversation. Jennifer Scott, there, founding partner of Iain Capital, joining us this afternoon from Singapore. Coming up, we'll wrap up some of the actions so far. We'll also look ahead to what we're expecting next year in Singapore and, of course, the events in Mali. Our head of economics, Stephanie Flanders, is joining. That's up next, and this is Bloomberg. It's a momentous week over in Bali. Our reporters, of course, on the ground covering this historic G20 which Russian President Vladimir Putin has excused himself from, while the leaders of the US and China have had a 3-hour discussion paving the way for warmer ties. Now, here in Singapore, Bloomberg's New Economy Forum, of course, is hosting leaders from across the world of business, finance, discussing everything from monetary tightening and inflation to the collapse of crypto. Well, joining us now is one of the people that puts this program together, our editorial head of Bloomberg Economics. She is the one and only Stephanie Flanders. Stephanie, thank you so much for joining us. I know you have a broad remit to look at the economy from China to Europe to the US. Which part of the world is most interesting right now?
I think we have had for a while the biggest question marks are about China. We know the dynamic in the US, and the investors may not like the way that the Fed's moving. They may be clutching at straws and thinking about maybe that Fed pivot. But we have a basic understanding of what's unfolding there. And I think in Europe, similarly, and we may even potentially be heading, at least outside the UK, for not the kind of steep recession that we had feared before. China is the big question mark. How is it going to exit from COVID zero? What's that going to mean for its economy? And what's its long-term trajectory, which is so important for this region?
But what does the world need in China? If China opens up too quickly, they're going to need energy that the rest of the world also needs.
Well, no, that is a good point. I think we're not in that, we don't face that risk right now. I think the bigger question mark is, what kind of support it could offer, cushioning it could offer to the global economy. Remember, we've had repeatedly times where there's been a slowdown in the rest of the global economy. China's demand has kind of come to the rescue. That's not going to happen this time. I think there is a question mark about how fast it manages to open up, and we're having signals that it may open up a little bit quicker. You're quite right, though. At Bloomberg Economics, we've been sort of thinking about the potential inflation impact of that better outlook on the COVID zero front. I think at the moment we would see a relatively muted effect, but I think that is something worth watching over time.
Kudos also to Tom Orlik on your team, talking about what if everything that could go wrong goes wrong at the same time. Talking about the UK, this is a huge week. Finally, we get a fiscal statement from the Chancellor on Thursday.
Yeah, and I think there's a real risk. People question, what's the credibility cost from Trussonomics, from the fiasco we had under the Truss regime and the Kwarteng mini budget. I think the real risk is of overdoing it, that the Chancellor is going to feel under pressure to choose it as a kind of fiscal virility test, that you have your £54 billion, your kind of 2% of GDP of tightening. It's not clear. You don't see lots of other European governments who've also had a rise in borrowing costs, have probably also had a hole open up in their fiscal accounts. You're not seeing them scurrying to fill it. And I just fear that we're going to end up doing too much too quickly for a very weak economy.
So what you're saying is basically there's a danger of overdoing austerity to prove the markets that they mean business.
Yeah, I think you have that. So you're not being given, the fear is they won't be given the benefit of the doubt. I think that's sort of overstated because Rishi Sunak obviously was Chancellor before. He had a pretty surprisingly strong record on raising taxes, very big corporation tax increases that are just coming through now, increasing the taxes on companies. So I don't think there is that much of a credibility question around Rishi. The question he has to look out for is the credibility of his proposals. Can he get it through Parliament? And if he's asking for too much, there is a risk that investors will actually say, this isn't doable a year and a half out from an election.
Do you worry about the tight labour market, or do you worry about a housing crisis in the UK more? I mean, what a choice.
I take my choice. As a homeowner in the UK. I do think we are so relative even to other economies, and of course lots of places, Australia, other places have become very dependent on the housing market. We are perhaps uniquely vulnerable. So I think that has to be front and centre. In London, every other shop, it seems often is a real estate company. We are hugely dependent, and if those higher interest rates come through, people start renegotiating, refinancing at maybe treble the rate they had before. They're going to fail affordability tests. I think it could be a real issue.
Yeah, it could be an issue. Stephanie, as always, thank you so much. Stephanie Flanders, our head of Bloomberg Economics. We'll have plenty more throughout the day right here from Singapore. This is Bloomberg.
The Fed still feels like they still have to go higher on rates to cool inflation.
It's not yet time for us to change course on our monetary policy. We haven't gotten the job done. And to take the foot off the brake right now and not finish the job, I think is the absolute worst mistake.
We've done a lot, but we have additional work to do both on raising rates and sustaining restraint to bring inflation down.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. Biden and Xi lower the temperature. The two leaders take the biggest step in years to avoid a clash between the U.S. and China. Credit Suisse's overhaul begins. Senior bankers in Asia are among the first to go as the Swiss bank carries out its plan to cut 9,000 jobs. And a mysterious series of tweets from the former CEO of FTX after he loses the company he founded. Sam Bankman-Fried may be setting the stage for a tell-all account by tweeting the words, "What happened?" Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. And that is the question many people are still asking themselves, Kailey, in connection with FTX. What on earth did just happen? We'll wait to see if SBF wants to shed any light on some of that. In terms of the markets, though, Europe seems determined to move nowhere, despite a much more positive session in Asia, and in US futures.
Well, Anna, a positive session is almost underselling it when it comes to the Asian session. We saw some massive moves overnight. It seems that almost every force that has been working against the Chinese equity market is suddenly turning the other way. You have commitments to shore up the property sector, easing of COVID-0 policy, progress on U.S. audits of Chinese companies listed in the U.S., and then, of course, that meeting yesterday between President Biden and Xi Jinping, which maybe paves the way to better relations between the world's two largest economies. So you add all that up, and what we got was a massive rally overnight. The Hang Seng China Enterprise Index up nearly 5%. It is back in a bull market, as is the broader Hang Seng Index, and the Hang Seng Tech Index up 7.3%. So some really, really big moves there. And there was a big move on an individual equity in Taiwan as well. Taiwan Semiconductor, TSMC, jumping nearly 8% after a filing showed that Warren Buffett's Berkshire Hathaway took a $5 billion stake in the company. So it seems that famed investor thinks a bottom may be in. When it comes to that name in particular. Finally, in foreign exchange, I wanted to point to the Japanese yen. Pretty much everything is stronger against the U.S. dollar today, and that includes the yen. It's stronger by about 0.5%. 139.24 is where we trade. Interestingly, though, that was after a surprise contraction in Japanese GDP that probably reinforces dovish policy from the BOJ, Matt.
Yeah, but the point is a weaker dollar is what we're seeing right now, and that could be a real tailwind for risk assets. You can see S&P futures right now about 0.7%. We lost 0.9% in yesterday's cash trade, but still holding at 39.52. The dollar index had gained back some ground yesterday after losing 3.5% over the past week. Now it's off again. We've already come down through the 50-day and 100-day moving averages for the Bloomberg dollar index. So now we're watching the 200-day as it trades at 12.72. The U.S. 10-year yield also coming back down, now about 4 basis points to 381.43. Remember, it was rising at this point yesterday, and that is a headwind for risk assets. So when it comes down, that's better for stocks. And then Bitcoin right now up 2.5%, but still trading basically around the same level as we saw yesterday, $16,814. We are all still asking, Anna, what happened at SBF's FTX? And one thing he told the NYT was they had quite a large margin position, referring to his trading vehicle, Alameda. So maybe they were using funds from somewhere that they shouldn't have been.
Yes, more on crypto coming up this hour then, Matt. Let's have a look at the European equity market picture. So we've got better mood music coming from Xi and from Biden when they've been talking at the G20. Has that led to some more risk-on sentiment? We've certainly seen weakness in the dollar. It's not helping to lift European stocks all that much. We're pretty flat, really, overall when it comes to the European picture. Up a bit in France, down a bit over in Germany. I'll linger on Germany for a moment, though. We've had the German November ZEW Investor Expectations Index. So this is a survey of investors from financial professionals asking them how they feel about the German economy and the global economy. It came in at minus 36.7, which means nothing as a number, but that is against an estimate of minus 51. So this is better expectations for the German economy than had been anticipated, really, amongst the German professional investor community. Let's have a look at what's going on across a range of other assets. We've mentioned what's been going on in FX markets, and that is the story. So I put in here the pound and the euro, both of them strong, but really it is dollar weakness that has been driving this. The pound has an added dimension. 118.32. We got unemployment data out from the UK earlier on. The two headline stories really running from this. We've seen the biggest wage increase in a year, which is not moving in the right direction for the Bank of England. We've also seen more people dropping out of the labour market, which is also not moving in the right direction in terms of trying to remove the tightness of the labour story. There's the euro at 104. That's the handle now. Vodafone down by nearly 8%. The organic sales number actually coming in better than expected, but the guidance was weak, and that's what the market is moving on. Drax Group is a power generating business. This is important for Thursday when we get the autumn statement here in the UK. There's been a lot of talk about imposing wider windfall taxes on excess profits at some of these businesses. Well, now we've got some further detailed reporting that suggests a 40% excess profit tax might be coming. Strangely, that level of certainty seems to be being taken as a comfort by markets, and so we see the stock rally. We'll wait for Thursday to get the full details. Matt?
I guess the devil you know is better than the devil you don't. Let's get to to Bali right now. President Biden and Chinese leader Xi Jinping have agreed to a series of goodwill gestures after a 3-hour meeting on the sidelines of the G20 summit in Indonesia. The two sides will resume cooperation on issues including climate change and food security, but differences remain, of course, over Taiwan as well as trade. Catherine Tai, U.S. Trade Representative, spoke on the talks at the Bloomberg New Economy Forum in Singapore.
President Biden made clear that the United States will continue to vigorously compete with China, including by making investments at home. And you've seen the Inflation Reduction Act, the CHIPS and Science Act, and by aligning with allies and partners where we have shared interests and challenges.
Anne-Marie Horder is Bloomberg's Washington correspondent. She is in Bali right now for the G20 talk. So, Anne-Marie, what do we know about the olive branches being passed back and forth between the presidents of the U.S. and China?
Well, listen, Matt, the bar was very low going into this meeting. There was no supposed to be a joint communique or deliverables. We had separate statements, but it does look like one key win for the Biden administration was the fact that in the U.S. statement, it said that China and the U.S. both are concerned and do not want to see nuclear force on the European continent. So there does seem to be this nod from China that they are growing uneasy from the rhetoric coming out of Putin in Moscow. The other big takeaway, of course, is the fact that we are seeing a warmer of relationships in the sense that senior key Biden administration officials will be working with their counterparts on a number of really important issues at this moment, like debt relief, like food security, like climate change. And then, of course, the president's top diplomat, Secretary of State Antony Blinken, will make a trip to China to follow up on these discussions. So you can see the temperature has certainly taken a step lower after what we saw over the summer when they really hit an all-time low after Speaker Pelosi's visit to Taiwan and what we saw from Beijing, which was pulling out of a number of discussions with the United States, but also provocative military drills in the Taiwan Strait.
Anne-Marie, give us some further updates on what's going on there at the G20. Admiral John Kirby, Coordinator for Strategic Communications at the U.S. National Security Council, I know spoke with you earlier on a variety of topics, including the war in Ukraine. So let's listen to that.
Clearly has no indication or no inclination to sit down and negotiate, and quite the contrary. You know, he's buying drones from Iran. He's establishing martial law in these so-called annexed territories, which obviously they don't belong to Russia. Everything he's doing says he's doubling down in terms of trying to extend this conflict.
Admiral John Kirby, speaking to you a little earlier, Anne-Marie, put that conversation in some context, and also worth noting that the Kremlin just saying that Russia will continue its military operation in Ukraine, the operation that many in the world call a war. Many at the G20 would call a war, but that word might not, it might not be called the Ukrainian war in the G20 communique if we get one.
Yeah, that's right. Russia's invasion of Ukraine, Anna, is just completely overshadowing all the talks here. And it's the main driver behind the bilaterals and the meetings on the sidelines you are seeing here at the G20. Two things to note. My conversation just now with Admiral Kirby came as also we learned about Bill Burns, the CIA director. We know that he was in Ankara yesterday meeting his Russian counterpart. We now know that that conversation was about the threat of nuclear weapons and really the United States wanting to ward off Russia from using any nuclear weapons. Also likely to be discussed was the two Americans detained, or high-profile Americans detained in Russia right now, and that's former Marine Paul Whelan and WNBA star Brittany Griner. The second thing we should note, and really a huge topic here at the G20, you had Indonesia's president. They are the presidency as well and host country of this G20. They are talking about food insecurity. And there's a great Bloomberg scoop just out 15 minutes ago about the fact that Russia does seem willing to extend the Black Sea grain deal past November 19th. This was a critical question coming into the G20. Will they allow for that? And President Biden recently met with Turkey's Erdogan on the sidelines. Food insecurity was discussed. Turkey has been a key player making sure that is through. So that is one optimistic takeaway from this G20 because that has really affected the most porous and developing countries around the world.
All right, Bloomberg's Anne-Marie Horder reporting from Bali. Thank you so much. Meanwhile, here at home in domestic political news, former President Donald Trump has said he will make a big announcement in Florida tonight. He is widely expected to make another run for the White House in 2024. But of course, his grip on the Republican Party, a question mark at this point, as several candidates he endorsed lost in the midterms, including news overnight that Kari Lake, the Republican gubernatorial candidate in Arizona and a 2020 election denier, lost her race. Moving on to other business news now, Credit Suisse agreed to sell a significant part of its securitized products group to Apollo Global Management. The deal will help cut back a business that soaks up capital. Let's get more with Bloomberg's Danny Berger. So, Danny, they're making moves.
They are making moves. This was widely expected, as is basically everything Credit Suisse is doing now. But that is the point. They're finally putting to action this restructuring that they've laid out. So they had said when they announced this restructuring that Apollo was the likely buyer. That's exactly what we've gotten here. It means that with Apollo's deals, this Apollo deal and some other third-party deals, the size of SPG now goes from $75 billion to $20 billion, all with the focus of shoring up their finances. We also, according to people familiar, learned of some layoffs that Credit Suisse is doing as well. They're letting go 3 managing directors in their Asia investment business and their finance teams. 3, though, just a drop in the bucket compared to what they're actually planning. They plan on letting go about 2,700 folks by this quarter, the end of this quarter, and in total by 2025, it should be 9,000.
Danny, I know that also on your mind is what we've seen hedge funds doing with their money, essentially. And from the 13F filings with the SEC, you can either look at the big picture, you know, whether hedge funds are winning or losing at the moment given market trends, or you can pick out specifics and really interesting, you know, what is Warren Buffett doing with his money, for example. So what caught your eye?
Well, what Warren Buffett's doing always catches my eye, and this market's eye, to be fair. Kailey was talking about at the top of the show, the fact that he's put about $5 billion into the ADR of TSMC. I mean, this is a really sizable chunk.
A Taiwanese business.
Yes, exactly. A Taiwanese business, a chip maker. So 2 thoughts come to mind. One is he calling a bottom in the chip making sector. It's had a lot of struggles, be supply chains or demand. And also the fact geopolitics feature very heavily in this sector, not just because it's a Taiwanese company, but also you have President Biden, you know, restricting what sales can happen to China with chip makers. Of course, happens that we happen to hear about the 13F filings after we had this meeting between Biden and Xi. So is it a thawing of tensions, perhaps, that Buffett also saw? Of course, this happened much earlier. But in general, long-short equity funds who've really suffered this year did play it very safe. They pulled back. Probably an unfortunate time to do so, considering the S&P has rallied since the end of September.
Yeah, absolutely. Danny, thanks so much. Bloomberg's Danny Berger running through what some of the big funds are doing with their money. Now, the former FTX, which no longer has any money, the CEO there isn't shying away from the spotlight after the demise of his company. A series of cryptic tweets spelled out the words "what happened" over the past 24 hours on Sam Bankman-Fried's account, sparking hot debate and even anger on the platform, obviously. Ana Herrera, Bloomberg senior crypto editor, joins us now for more. So, Ana, this is so weird. I saw these tweets pop up on my feed, and just strange behavior for someone who seems to have lost money for so many people.
Yeah, I mean, crypto is still a bit of a weird sector, let's say, in finance. So it is surprising, but not too surprising. Obviously, I don't have the answers as to what he means, if he means he's going to give us more information or not. Certainly, people weren't very happy because it seemed a bit jokey, and people were pointing out, you know, it might seem like a joke to you, but people are losing money. This isn't a great look for the industry, and some of us are trying to maybe build real things. So we don't know what he meant, but we know he made people very angry.
Well, and Anna, we know he's left a certain void in terms of leadership for the crypto industry, one that now CZ of Binance seems pretty determined to step into, become crypto's new savior, talking about a recovery fund. But what is the risk around that kind of power concentration?
Yeah, obviously, you know, we saw already with SBF, he wasn't just like the CEO of FTX, he was becoming a white knight in the crypto winter, rescuing other firms. So people are wondering whether we might have the same issue if CZ becomes a white knight. If something happens to Binance, who rescues Binance, right? So, you know, he's been a savior, but also in a way he precipitated what happened because everything unfolded in his tweets. So it's definitely one to watch and see what happens there, who takes SBF's place.
A saga that's continuing to unfold. Thank you so much to Bloomberg's Ana Herrera for her reporting from London. And remember to get more on crypto by tuning into Bloomberg Crypto today at 1 p.m. New York time, 6 p.m. in London. It's our weekly show that covers the people, transactions, and technology shaping the world of decentralized finance, which has gotten a lot more interesting in the last couple weeks, Anna.
Yeah, absolutely. Certainly a theme we can pick up with our next guest. Iain Stealey joins us, JPMorgan Asset Management Global Fixed Income CIO. In fact, we'll talk to him about the bond markets, about volatility, about how we navigate 2023, and corporate debt seems to be getting a lot of attention. We'll talk about that too. Julie Norman also joins us, thinking about the geopolitics. UCL Center on US Politics co-director. We'll talk about how the geopolitics is playing out, how the war develops in Ukraine, and possibly a little about a potential return for Trump. Plus, Citadel founder Ken Griffin is not optimistic about the US economy. More on our interview with Ken Griffin from the Bloomberg New Economy Forum in Singapore ahead.
My team, for choice, thinks 2023 we avoid a recession. I'm a little more skeptical about that. I think that for the Fed to truly conquer inflation here, we're going to put unemployment somewhere with a mid-4 handle, and I find it hard to believe we're not going to have a recession at that point in time.
Welcome back to Bloomberg Surveillance, the early edition. I'm Matt Miller, Kailey Leinz here in New York, Anna Edwards with us out of London. I continue to watch the dollar fall today. We've seen it break through its 50-day moving average, then its 100-day moving average. It's now headed down to its 200-day moving average as measured by the Bloomberg Dollar Index. And that seems to be a real tailwind for risk assets. Let's bring in Justina Lee right now, Bloomberg markets reporter. She covers, she's a cross-asset markets reporter, I believe. So, Justina, when you put on your FX hat, why is the dollar losing strength?
It really is all part of this post-CPI market swing. I mean, you know, for a long time, the dollar had been rallying. And so to begin with, it was probably already a bit extended. And now we have kind of like two factors influencing that. I mean, on one hand, you kind of have hopes of a Fed pivot. Of course, we kind of got a little bit more, you know, speculation in that direction after comments from the Fed vice chair yesterday. But on the other hand, you also have news of China reopening. And so that is also supporting risk assets and kind of increasing this appetite for currencies other than the dollar.
Yeah, good morning to you, Justina. So you've got both of those things in the mix. You've got all the news flow surrounding China, and it comes so quickly. We've got property, we've got a pivot perhaps on COVID. We've got better mood music between Xi and Biden. How much do you think those things are going to be in the driving seat as we move towards the end of the year? Are we still glued, of course, to the Fed narrative?
Right. I think the China headlines have been really helpful. Of course, we kind of didn't get any signs of easing for a really long time. So I think investors are kind of in this sweet spot now where they're a little bit less worried about tightening. But at the same time, there are no strong indications yet that we're, you know, heading for a recession. But of course, a lot of people like to talk about the lag effects of monetary tightening. So it could still be that we're headed for slower economic growth. But for now, it seems like, you know, markets are having a great time with, you know, previously speculative stocks coming back up again.
Yeah, back to bull market in some measures of stocks in Asia, some exchanges in Asia, and not far from bull market on some European markets as well. Justina, thank you very much. Bloomberg's Justina Lee with the latest on the markets. And for more market analysis, you can check out MLIV Go. That's the function to use to find the Markets Live blog on the Bloomberg terminal. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. The U.S. and Indonesia have announced a climate finance deal providing $20 billion to help Indonesia pivot away from coal power. The Biden administration calls it the largest single climate finance transaction ever. It will be outlined at the Group of 20 summit in Bali. In China, economic activity weakened last month. That's putting pressure on Beijing to ramp up support. Retail sales unexpectedly fell for the first time since May. Industrial output growth also contracted, and so did property investment. China recently took its strongest steps yet to stabilize the property market and reduce the economic burden of the COVID-0 policy. And in Arizona, Democrat Katie Hobbs has turned back a prominent election denier to be elected governor. Hobbs defeated Republican Kari Lake, who embraced Donald Trump's baseless claims of fraud in the 2020 election. The Associated Press called the race with about 98% of the ballots counted. Hobbs has a more than 20,000 vote lead. And we'll talk more about politics coming up, but first we'll get to the markets conversation. Iain Stealey, JPMorgan Asset Management Global Fixed Income CIO, will be joining us to discuss his outlook for 2023 and what opportunities may present themselves in credit markets. That's next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Biden and Xi lower the temperature. The two leaders take the biggest step in years to avoid a clash between the US and China. Credit Suisse's overhaul begins. Senior bankers in Asia are among the first to go as the Swiss bank carries out its plan to cut 9,000 jobs. And a mysterious series of tweets from the former CEO of FTX after he loses the company he founded. Sam Bankman-Fried may be setting the stage for a tell-all account by tweeting the words, "What happened?" I'm Anna Edwards in London with Matt Miller and Kailey Leinz in New York. A question many will keep asking then, Matt, when it comes to the FTX story, what did happen? But right now, we're confronted by markets where risk appetite seems to have improved.
Yeah, we're looking at some tailwinds in the market, and you can see that illustrated by S&P futures now up about 0.7%. We did close the day yesterday down a little bit, but still at 39.52, so relatively high levels. Remember, the strategists are forecasting in a Bloomberg survey 4,055 on the S&P by the end of the year. So we're almost there. Bloomberg U.S. dollar index coming down. This is one of the tailwinds. As we see the dollar get, losing strength, that really helps stocks. The same is true with a 10-year yield. As it comes down, that really helps the argument to put your money in stocks instead of debt, although we're going to talk about debt in just a moment. Bitcoin also gaining right now 2.33%, still at the same level it was yesterday at 16,773. So still below 17,000, but not as bad as maybe you would have expected if I had told you last week that one of the biggest exchanges in crypto was going to go completely bankrupt. Kailey, what do you see in terms of pre-market movers?
Well, we know that saga engulfing FTX is not just limited to FTX. It has sent ripples all throughout crypto markets and other exchanges as well, the likes of Coinbase. It has seen immense volatility over the last several trading days. Monday to Wednesday last week, it was down about 21%. Then Thursday and Friday, it rallied 24%. And then it was down another 7 to 8% yesterday. And today it's back up about 2.8% in pre-market trading. So definitely a name we continue to watch. And Robinhood has followed a similar pattern. Of course, FTX had taken a large stake. There was a question of whether it was going to try to take it out. It has seen incredible amounts of volatility as well, but is higher by about 3% in pre-market trading. Then another basket of stocks that is higher as a group is really just Chinese technology companies that have listings here in the U.S. Following on from the big rally we saw in the Asian session overnight, there's progress on audits, progress on relations between the U.S. and China after the Biden-Xi Jinping meeting, progress on COVID-0, and just supporting the Chinese economy overall. So as a result, the likes of Alibaba up 11% before the bell, and JD.com higher by about 8% as well, Anna.
Yes, we moved into bull market territory on some of those Asia markets. That's having a read across. We're actually not far from bull market territory on the DAX, which is incredible. Some of the mild weather here in Europe having something to do with that, perhaps. But overall, the story for Europe today, pretty unchanged. As it says on the screen for the radio audience, it says unchanged here on our screen. The pound against the US dollar, 118.52, so pound strength. But really, this is a dollar weakness story. Yes, we've had UK labour market data. That continues to show tightness, real tightness in the labour market. Vodafone, the mobile phone operator, the cell phone operator here, down by just shy of 8%. The company's backward-looking numbers on organic sales, they were better than anticipated. But the guidance was the thing that's weighed on the stock. And Drax Group, a power generation business, this whole sector bouncing today. Interestingly, we've seen the sector under pressure on plenty of talk about whether we'll see a windfall tax on excess profits for this sector. And then just overnight, we got some firmer reporting that suggested, yes, we might see that come Thursday. It might be a 40% tax. We'll wait for the details, and we don't have the facts yet. We'll have to wait for the autumn statement on Thursday. But the market responding to a little bit of certainty, it seems there, Matt, and sending that sector higher.
Yeah, it's good to have some certainty, I guess, rather than no certainty, right? Uncertainty is the enemy of an investor. Joining us now, or obviously offers opportunity if other people have uncertainty. Joining us now to talk about fixed income is Iain Stealey, JPMorgan Asset Management Global Fixed Income CIO. And Iain, it's great to have you on because a lot of people are talking about the opportunities in your space. In fact, Matthew Mish from UBS put out a note last night that caught my eye. He says it's a once-in-a-decade opportunity in 2023, but timing is everything. What do you think is the most interesting opportunity out there?
Yeah, good morning. I think it is definitely a good opportunity because it seems to be that everyone's looking at bonds being back as an argument for 2023. We've obviously seen this huge repricing over the course of this year. If you look at global ag indices down 3 times what we've had on the previous worst year since the index has been created. And everyone's now starting to look at an environment where central banks are, I'm not going to use the word pivot, but they're maybe looking at pausing. They're at least looking at slowing down the pace of hikes. We've obviously had a good inflation print, although still very high, but a good, I guess, direction last week out of the US. And now people are thinking, actually, given this repricing, is it time to start buying back into bonds? And I do think that 2023 is going to be a really good opportunity to be owning fixed income. By the way, in terms of central banks pausing, does the U.S. get there first, fastest to the finish line and done with the race, and then BOE and the ECB and everyone else have to catch up? I think so. When you think about what's happened over the course of this year, the Fed obviously have been much more aggressive than both the BOE and the ECB. And they've also got inflation coming back down, and we'll see what happens in the UK tomorrow. But inflation probably hasn't peaked yet, or maybe it peaked last month. Obviously, in Europe, we all thought it might have peaked a couple of months ago, and then we had that blockbuster print. So there's definitely a difference in inflation dynamics between what's going on over here in Europe and the US. And I think the Fed, having done a lot of heavy lifting already, probably do have the ability to at least slow down and take a pause and see what's going on at some point early next year.
Thinking about, yes, good morning to you, Iain. We've got, inflation data out of the UK tomorrow. We had the jobs data today, showed a continuation of that really tight labour supply story. Another thing that we have ongoing concern about here in the UK is the supply to the bond markets and whether we're going to see too much supply in terms of appetite. We saw the bid-to-cover ratio today on a 10-year bond auction falling to the lowest since October 2019, down at 2.11. What do you think about the level of supply and whether the market can take it?
So I think 2 things. Firstly, historically, this is going to be a large level of supply. We've obviously got to contend with QT at the same time. So that is going to give challenges. But in a sense, the market's aware of this. We know there's a lot of supply coming. We know we've got to deal with the Bank of England looking to also reduce its balance sheets. I think what's going to be more important, and again, we'll hear more at the autumn statement, but I think it's just confidence in markets. That's what the gilt market is really looking for. They're looking for a statement that isn't going to disrupt, as we saw a couple of months ago. And then hopefully we can have the gilt market behaving in line with really what the Bank of England is thinking. And then the Bank of England's going to have to make the heavy decisions or the hard decisions as to whether they want to focus on inflation or whether they're actually going to be looking at the growth outlook. And
whether those two are in line is interesting because the Bank of England just recently, and we'll hear more from them today in a testimony, I think, in Westminster, but the Bank of England just recently, very bluntly saying to the markets, you're expecting too much. We're not going to hike as much as you think we are. Do you think the BOE is happy with the response they've seen to that kind of commentary? Is there much more still to go there?
We've definitely had, so even from what their forecasts were using higher rates than was the current market rate at the time. So it had already come down a bit. I think they're saying, actually, when we look at the UK, probably in recession already. We know we had the negative GDP print for the third quarter, likely to be actually in a technical recession. Is that really an environment when we're going to continue to do these elevated hikes, these oversized hikes? I think that's what they're pushing back on. It is, though, going to depend on the inflation outlook. And if inflation doesn't come down, then they might be forced to go up there. But I think at the moment, they're saying, we know monetary policy works with lags. We know it's going to have an impact on growth. It's already having an impact on growth. And actually, we don't think we're going to need to do quite as much as what the market's pricing.
What about the impact on corporate health, Iain? I mean, how high is default risk this cycle?
I think default rate is going to pick up. We were obviously at extremely low levels of defaults when you look on a trailing 12-month basis. But I do think when we look at particularly what's going on in the bond market, that actually the likelihood is that defaults are probably not going to be as bad as they've been through previous recessions. And when you look at the average credit quality, particularly in the US, the amount of double Bs in the high yield space has increased. The amount of triple Cs has decreased. We had a default cycle a couple of years ago during the pandemic, and a lot of some of maybe the weaker hands have left the bond market and they've gone searching for financing in the loan market. So I think actually the bond space is probably going to be a little bit more robust than it's been through previous recessions. That's not to say, though, it isn't going to peak up a little bit from current levels.
And finally, Iain, just on the subject of default, as it relates to U.S. politics, we're obviously still seeing the trickling in of results from the midterm elections, but it looks like the Republicans are just a seat away from taking control of the House, which would present us with a divided government. How are you looking at the debt ceiling question, really just the broader fiscal question here in the United States as it relates to fixed income?
I think it's always something that you have to have in the back of your mind. I do think there will be. I think we always get to the situation where it becomes a little bit last moment. I do feel that they will obviously want to deal with the debt ceiling, and I think we've got an economy in the US that is going to be challenged next year. Whether it's a soft landing, whether it's a recession, that remains to be seen. But I don't think they want the problem of the debt ceiling overhanging that when the economy is sort of struggling a little.
Okay, debt ceilings. Back to that conversation. Iain, thanks very much. Iain Stealey of JPMorgan Asset Management. Thanks very much for spending time with us here on Bloomberg TV. Coming up here on this programme, Julie Norman joins us, UCL Center on US politics, where she is co-director. Lots to talk to her about when it comes to Chinese relations, when it comes to the road to 2024. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the principal room. Coming up later today, an interview with former ECB President Jean-Claude Trichet. That's at 12:30 p.m. in New York, 5:30 p.m. in London. This is Bloomberg.
He lost in 2020. We lost Georgia because of his behavior in the Senate race in 2020. That's a second loss. And then this year, the Republicans lost the Senate because the Trump-backed candidates in the Senate races were rejected by American voters. That's a three-time loser. And I'd like to think that the Republican Party is ready to move on from somebody who's been, for this party, a three-time loser.
That was Ken Griffin, Citadel's founder, speaking at the Bloomberg New Economy Forum in Singapore. Of course, speaking of former President Trump, who is set to announce he's running for the White House again in 2024. That announcement expected to come tonight at his Mar-a-Lago club in Florida. Joining us now is Julie Norman, UCL Center on U.S. Politics co-director. So, Julie, as we await what is expected to be another run announcement from the former president, can you just give us your assessment on his remaining grip on the Republican Party, considering what Griffin was alluding to there, midterm results that showed candidates he endorsed didn't necessarily do well, including Kari Lake, an election denier who just lost the gubernatorial race in Arizona?
Well, that's true, Kailey. I mean, many of Trump's backed candidates did not do well on election night, and that's been very clear. It's important, though, that many of his candidates did still win, and even with the losses, I think Trump will still try and leverage this as much as possible to his advantage. He will kind of cast the blame on others, almost say it's because he was not on the ballot that the party had a less than successful night, and will, just try and leverage this for himself. I think he will also try and set himself up almost as an underdog, as the momentum around DeSantis builds. Obviously, DeSantis had a great night on Tuesday. For the first time this week, he did edge a little bit over Trump in the polls for who voters want for a candidate in 2024. Again, he's going to ride that bump. I think Trump is going to come out swinging at that and really try and set this up and take the headlines back to himself as of tonight or as soon as possible.
Well, of course, Julie, before we can get to 2024, we have to get to January when the new Congress will begin its session, and it is looking like Republicans will have a very narrow majority in the House. A divided government, realistically, is what we're looking at. Can anything be accomplished before then in the near term, be it legislation on gay marriage, on codifying Roe v. Wade, on the debt ceiling? Do you see any opportunity in the lame duck session?
Yeah, Kailey, I mean, even though the Republicans did not do as well as expected, they still will hold the House most likely. And so, a majority is a majority, and that means we're expecting mostly gridlock. With the Democrats still holding the Senate, they can still get through judicial nominations and other nominations from the Biden administration. That's not nothing, especially at some of those federal court levels. But in terms of other legislation that Democrats have been running on, most of that is going to grind to a halt. I think what we'll see more of Republicans trying to use their advantage in the House to weaken Biden and the Democrats as much as possible going into 2024, launching investigations into Hunter Biden and others, really trying to push their agenda items, and really just use this time to, again, just really set up for 2024, even without much legislation probably happening in this next year or two.
I just want to ask a couple of moonshot legislation questions, Julie, because investors are paying very close attention, some, to whether or not we'll get a Safe Banking Act, which would allow, cannabis companies to do business with Wall Street. Is that a possibility here? We've been waiting for it for a long time, and maybe federal legalization of marijuana.
I doubt it's something that I think that we would see this Congress pass. It's possible. Again, I think we'll see some candidates who would like to bump that up as an issue that probably bodes well in their districts. But in terms of the federal legalization, that's something that I don't see imminent, but it's not impossible either.
In terms of voting well in their districts around here, SALT deductions would be great. State and local taxes are very high in New York and New Jersey. Is that a possibility, or is that just dead?
I think some of those things will still come forward, and I think most of those, though, will probably be more at the state level. In terms of getting federal legislation through on some of these things, again, a lot of it's just going to come down to party posturing, not wanting to give an edge to the other party, even if there seems to be possibly some bipartisan agreement there, especially in the House. Again, there might be a few of these measures that get through, but I think both parties are just going to try and make the other one look bad as much as possible, and are going to be hesitant to compromise, even on some of these issues where we think it might be plausible for voters.
Julie, good morning. So away from the U.S. domestic policy, on the international agenda, we've seen this very important meeting taking place, the first presidential face-to-face meeting between Biden and Xi. A lot of people making quite a big deal out of some of the language coming out of it, and certainly on the use of nuclear weapons in Ukraine, all of that, quite a comfort to those who don't want to see any escalation. What do you take away from this in terms of U.S. politics, how this plays from here?
Yeah, this meeting between Xi and Biden yesterday was notable. It was their first face-to-face meeting since Biden has taken office, and part of it was just to get communication and engagement back on track. That really hit a low after Pelosi's visit to Taiwan in August, so part of this was just getting those communication channels open. I think for Biden, it was important to hear Xi say he, is not condemning outright the war in Ukraine, but at the same time, he's saying we really don't want these threats or, God forbid, use of nuclear weapons. Certainly is not throwing his weight behind Russia in a way that many in the U.S. feared that he may have a while back. Even on Taiwan, I think that's an issue where, of course, there's the most potential for a flashpoint. But even there, I think Biden came out of the meeting saying, this isn't imminent. We talked about our red lines, and we clearly disagree on this, but we don't see this, blowing up in the near future. And even just on their own relationship, we, heard that Blinken will be going to China in a few weeks. They're going to reopen some of these bilateral channels on climate change and other kind of common interest issues, which, again, had all ground to a halt over the summer.
Yeah, they were making the point that there's room for both models. That there's two big countries with two different models, and there's room for both. What does a world look like? Does the world with two models look bifurcated, Julie, or does it look cooperative?
Yeah, well, we heard Biden say, we're looking for competition, but not for conflict. And I think that's where the administration has been trying to pin things. Also, we heard Rishi Sunak saying similar things today. Biden explicitly said also he doesn't want this expanding into a kind of new Cold War. So I think they're trying to avoid that kind of bifurcation. But in reality, when you have two countries that are, really kind of vying for that at least economic superpower place, just by de facto reasons, some of that is going to happen regardless. And that's one reason why I think Biden at least sees meetings like this as important to try and avoid that tipping over into some kind of active conflict or confrontation.
Okay, Julie, thanks very much. Julie Norman joining us from UCL. Coming up later today, Republican Senator Rick Scott from Florida. That's at 12 p.m. in New York, 5 p.m. in London. So we continue the coverage of U.S. politics. This is Bloomberg.
I would say we're at the beginning of a bridge-building effort.
Countries need to cast aside Cold War mentality, reject bloc confrontation.
If before it was 8 out of 10 in terms of, shall we say, the heat factor, we may have brought it down to 7.
I think ultimately these are the two largest economies in the world. They have to figure out a way to work together. They're so interdependent.
The combination of the leadership teams getting together and the policymakers thinking about what can we actually do together is a needed and wanted desired outcome coming out of this.
He raised with President Xi something that we have raised consistently, U.S. concerns about the negative economic impacts of China's non-market economic policies.
Same thing could be said about, okay, what about the CHIP Act? And it can't be between China and U.S. discussing this.
Those were a few of the highlights from Bloomberg's new economy forum in Singapore, which is still taking place over the course of this week. But let's take a look at what else is coming up today. UK Chancellor Jeremy Hunt is taking questions in the House of Commons at 6:30 a.m. New York time. We'll hear from Fed speakers, including Philadelphia Fed President Patrick Harker and Fed Governor Lisa Cook. We'll get some U.S. economic data as well. PPI is released at 8:30 a.m. Eastern, and retailers Walmart and Home Depot will be reporting their earnings results. And these will be interesting. For Home Depot, of course, it's the read-through from a softer U.S. housing market as mortgages rise. And for Walmart, Matt, we know they've really struggled with a profitability problem because they have bloated inventories of discretionary goods that consumers no longer want. Therefore, they have to do a lot of discounting to get those down. And the read on the holiday quarter is going to be very interesting as well.
Yeah, absolutely, especially if the Fed achieves its goal and gets unemployment to move a little bit higher. You heard Ken Griffin earlier telling Eric Schatzker that he thinks we could see unemployment in the mid-4s next year. And we've already started to see a slew of job cuts, Anna. Yesterday, the Amazon announcement, maybe fairly small compared to its larger labor force, but nonetheless adding to the pile of job cuts we've gotten, especially in tech.
Yeah, absolutely. A pile of job cuts in tech. The Amazon news really interesting. It is the largest ever layoff from them, even if it is only a small proportion of their workforce, given the size of Amazon itself. But the one that caught my eye as well was FedEx, and they're furloughing some of their staff in their cargo unit. And this really, Kailey, got my attention because I remember just recently talking to Maersk, the global container shipping business, a different type of logistics, of course, but they were talking about quite a rapid slowdown into the year end. And it just, when you hear that kind of thing from logistics players, it just really does make you zoom in on how quickly things are slowing down.
Yeah, the question is demand going to slow down enough that you see the response in the inflation numbers and a signal that central banks, including the Federal Reserve, are getting the job done? Of course, that is what is really going to be critical for this market that still wants to cling to every indication that maybe a pivot is coming, or if it's not, we see that weighing on risk assets as well.
Well, maybe some of the discounting you were talking about at the retailers, back to where we started the conversation. That's obviously interesting on inflation, if it isn't all in services by this stage. But that is it for this hour of the programme. That's it for Early Edition. Surveillance is ahead. Plenty more to come on the global economy and from the new Economy Forum later on this week. This is Bloomberg.